What's going on, guys? Welcome back to the channel. Today is going to be a great video. We're going to be talking about managing emotions. For all of you traders out there that struggle with this, hopefully this video will bring some insight into your life and into your trading and hopefully make things a little bit better for you, and it'll also coach you along the way. So I want to get into sharing the screen. This is a stock that we traded today. First off, it was MGM. I went short. I ended up making $3,000 a day on it. Honestly, I almost lost $4,000 to $6,000 to $8,000. It could have been really bad. So I first started my trade and I was wrong. I was red big time, but I stuck to my trading plan and it ended up panning out correctly. So the whole purpose of this video is to show you that you can be right and wrong, but it's about you trusting your process and your strategy in your trade to hold even when you're red sometimes, and then let the trade kind of pan out for you. So what I want to do is show you guys the trades here. And if this is the first time you're tuning into my channel, I really do appreciate you guys tuning in. There's a ton of great stuff to learn from this channel, so make sure you hit the thumbs up button, subscribe, do all that good stuff, because it's endless. We really bring you the good stuff. So here we are. This is MGM. I start a short of 200 shares pre-market up here. All right, so we start short pre-market there. And then the market opens. I think I add another 100 shares short. And then we push up, and it looked like we were going to get a little roll over there a bit, so I go 4,000 shares short. As you can see, I'm still wrong. The stock squeezes out over $1 to the upside, so I'm actually red. I'm red like $4,000 at this point. Let me zoom in. So again, we go short 1, then we go short 2, and then we go short 3. And then stock goes up, 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 up. I'm red like $4,000. It's like, ooh, this is not feeling good. But my strategy is the same. Whenever we're trading near the green, we're typically going to bet against it. So we push up and over. You can see I add another 2,000 shares short at 23.60. So now I'm in about 6,000 shares short, a little more. And the stock, sure enough, ends up rolling over. We get below my average. I take some off, and I take more off here. And I could have probably caught a little bit more here, but after it being red 4,000, flipping the P&L from red $4,000 to green almost $3,000, it was like, you know what, let's wash away our sins of the stock and let's just get away from it on the short side. So that was the whole short, okay? And then you'll see I ended up going long down here, about 700 shares, and just catching this little bounce, okay? Now, if we take the trades off, the simple approach to this is we're trading up near the green, so we bet the opposite way. If we were opening the stock market today on MGM and we were down, if we were down on the green, then we'd probably be going long, okay? But since we were opening and running into the green, we were going short, all right? So I got to say, you guys have probably experienced trades like this where you're in a trade and it starts to go wrong and you're really feeling like, I can't hold any longer, I can't take the pressure, and then you close out your trade, you accumulate a big loss, and then the stock ends up working for you perfectly. I can wholeheartedly tell you, whenever I get myself into a situation like this today, where I'm actually having a big red and then it kind of reverses, it's because I'm overconfident in my approach to trading. When you become overconfident in your approach to trading, you might take an early entry like I did. Rather than waiting for it to hit the pinnacle moment, you might jump the gun a little bit, take an early entry, and then you have to hold through some pain. So I can say that typically when I run into a situation like this, it's when I'm overconfident in my approach or my strategy, and I really think it's going to happen. Like the short, you can see it worked perfect. So I get overconfident that I'm correct, and then I just kind of hammer in shares a little too soon. Very common thing that I do every once in a while. So in order to really manage emotion, guys, I strongly suggest that you make sure that you have a pretty sound approach to trading on the market. Whatever fits your style best, do that. And then get good at that, because that's what's going to allow you to do things like this. Take a trade and be wrong by $1, be down $4,000 and say it's okay, because this is still my strategy. It all makes sense, okay? So for me, when it comes to trading, we run off of the statistics channel. And so statistically speaking, the stock does not like to exist outside the green for like more than 4% of the time. So if the stock doesn't like to trade outside the green 4% of the time, theoretically, it'd be very risky to bet to the upside, and you'd have a higher probability of winning if you bet to the downside. Okay? So that's portion of why we bet, because we know from a statistical approach that stocks only trade outside the green level 4% of the time. And they're going to exist within the green level 96% of the time, from green to green, so from this point A to this point B, 96% of the time the stock will exist inside that channel. So if in the event it's trading at the green, there's a good chance it's going to go the opposite way. Knowing that, I was overconfident in my approach and I jumped the gun a little bit early. So I go red $4,000. Did it feel good? Hell no. I was freaking out a little bit. Like, oh shit, gonna lose 10 grand today. Fucking awesome. No, not cool. But you just kind of, this is the strategy. This is what's supposed to happen. You might run into the event where you're wrong and it blows off the top for you. But more often times than not, the system that I follow will retrace the market back in. So the only reason I was able to hold this trade today through the big red P&L is that I knew that this is my strategy. This is confidence in my approach. The confidence led me to take in an early entry. The confidence in my strategy also led me to turning the trade green. Now what I want to do is point out to you why also did we short? Why was it that we shorted this level so hard today? Why did I want to go up to 6,000 shares short on a stock like this today? What made Connor so keen on shorting that heavy a size? Let me show you. So we have a couple things here. Look at the aggressiveness of the move up pre-market. It was basically a straight shot up. For those of you that are newer watching this video, they're just learning to trade and you're on Robinhood, that's fine. But just know, the faster a stock goes up, the harder it's going to crash. And the faster a stock goes down, the bigger it's going to bounce. And the faster it goes up, the faster the retrace. So everything in the market is almost a reciprocal of the next, or it's a mirroring image. The faster it goes up, the faster it comes down. The bigger it goes up, the bigger it comes down. It's almost a mirroring effect. The slower it goes up, usually the slower it will come down. And that's typically the simplistic function of the market. So we went short here with such big size because we knew this was an aggressive move up into our green line, which is resistance. If it goes up fast, there's a good chance it comes down fast, and it's going to be big. So that's why we sized up. Secondly, watch this. So we have our intraday resistance where kind of around this price of, $23.33. Then if we go look at our daily chart resistance today started at 22.08. If we look at our 4-hour chart, we have a half standard deviation resistance right here at about 23.30, okay? If we go back to the daily chart, we have our 200 simple moving average resistance there. So let me rephrase everything I just said. Starting from a daily chart, we have 1 standard deviation resistance, simple moving average, 200 simple moving average resistance right there. We also, on the 4-hour chart, had half standard deviation resistance at 23.26. And then you go to the intraday chart and you realize it's trading all the way up here. So look at this, 1, 2, 3, 4. Those are all resistance points. 4-hour, long-term trending resistance. Daily chart, long-term trending resistance. 200 simple moving average resistance, right there. 2 standard deviation resistance on the intraday chart, right there. All stars aligned for a short. The stock had gone straight up into your daily chart, your 4-hour chart, your intraday chart resistance, and 200 simple moving average resistance. So when you have a sound approach to the market and you do have confidence in your system, it will allow you to hold through things like this. So when you watch a video and it says how to manage emotions, emotions can only be managed when the individual has an approach to the market that one can be confident in. Without confidence leaves room for question. With question comes hesitation. Therefore, you will always feel a little rocky inside if you're always on a hopeful kind of guessing game. Because how can you have confidence and stay sound if you're always nervous because you don't know exactly what's going on? For me, I was thrown for a curveball that it squeezed as strong as it did, as high as it did. But when I saw it come crashing back down, I knew that this was the right trade, this was the right pick. So right there, guys, daily chart, 4-hour chart, 200 simple moving average, intraday resistance, all lining up right at the same spot. That, ladies and gentlemen, is the approach to the market each day. We go in, we see if a stock is trading at an irrational level, and then we'll go and look at the longer term time frames to see, does this stock match up with a resistance point on the daily chart or the 4-hour chart? And if it doesn't, then you're probably not going to short it. Here's a good example of another stock. Watch this. NCLH. This stock went up all day long, all day long, all day long, all day long, and it traded earlier in the day. This green level was like right here, and it traded well over it. So how reliable is it to actually sell at that green line, Connor? Well, if we look at this chart, you're going to notice a big difference. Ready? Let's start with the daily chart. The daily chart has no statistical trending resistance. The closest resistance right now is at 18 with this stock. Let's go to the 4-hour chart. Closest resistance here is all the way up at 20. So there's no resistance right now on NCLH. It's coming from a bottom, going up to resistance, but there is none right now. So it's much easier for a stock like this to continue trending, because there's nothing there to stop it. But just wait, because we'll short this one too. Just wait until the day that this happens. Watch, I'm going to draw it for you. I'm going to tell you the future. If the stock goes like this, bang, and runs up to 20, 30, guess what? This is going to be the same exact thing we did on MGM. Ready? We would be running into this resistance mark. And if we go to the daily chart, right, and we kind of go all the way up to like past this point, 18, 19, we'll probably squeeze. So again, if we do all that, you will see the stock run up like this, okay? And you will hit all these resists. Excuse me, I drew that kind of off. But if it runs up like that, it's going to look like that. And it's going to run into that price of 20. You'll have a big old move. It runs into 20, and it's going to be hitting resistance. Now let's go back and take a look at the stock MGM and see if it looks picture perfect. Ready? So it's the same concept, right? Let's go to the daily chart here. So what happened? Theoretically, this was a big, long move all the way up. Oh, I got to draw. Here we go. Had a big, long move all the way up to what? The yellow line. And then what did it do? It ended up selling down. Because everyone currently has already bought on NCLH or the stock, MGM. They already bought down here. They bought off the trend. And then we reversed off trend, hit the upper trend, and now we're selling down. The same thing is pretty much happening with NCLH and a lot of the cruise lines and airlines. They're curling off. They're likely going to try to pop up, and then the next time they fall into sort of a bigger short move will be off the price of like 20 after we curl up and hit those trends. So I hope you guys liked the video. I hope you learned something new. Everybody take care. Have a great rest of your day. I'll see you guys on the next video after you smash that like button. Thank you.